Welcome to another day of Dating with the Day Tradester. We're starting here on our SPY S&P 500, which is indexed to the S&P 500. We are in our fifth straight day of down and red. We have a big day tomorrow with Jerome Powell. Tomorrow he gives his speech from this week's activities and results from the economic symposium there at Jackson Hole, Wyoming. If Jay Powell decides to have a speech that's a little dovish, then we might just see a big turnaround. If he's a little hawkish, we certainly will see the market to continue down. If you are in the markets, then you know how important tomorrow's speech will be. If you're not in the markets or you're new to the markets, then you will certainly learn pretty quickly how important speeches by the Fed chair actually are and how they affect the markets. As incredible as the multi-trillion dollar economy is in the United States, it's actually surprising to see how easily manipulatable the markets actually can be just based on a word that Jerome Powell might say. One specific word either direction can easily move the market, back up to $10 in one day or down $10. A whole sentence or a paragraph that can light the fuse of our next leg of the bull run, or it can absolutely just tank and crash the markets. But as traders in the markets every day, we have to learn how to handle the ups and downs. We have to learn how to make money from those moves. And we have to learn, most importantly, how to keep a level head and stay calm if the markets go absolutely against us. With that said, we're going to move on to our sell alerts. All right, Apple is our first one, APL. I am currently maxed out with 4 shares of Apple. We absolutely have a nice cross down and continuation in that price today past the fast moving average. So we're going to sell 1 share. See if it goes at 224.38. And we did sell that at 224.38. I have 2 shares that I bought at 220, so there's a $4 gain on that. If you have been following my videos and you decided to buy at this cross, actually at this cross most likely, because if you bought here and you bought when I did, you would have bought around this area here. Whoops, that's 227. So you would have bought around here when I did if you were tracking and following my trades. Then it's quite possible you might want to follow me right back out of this trade. Now, I'm making no recommendations on how many shares you purchase, and I'm making no recommendations on how many shares you sell. I'm simply showing you where I buy, and in this particular case, where I sell, and I'm showing you how many I do sell. All right, moving on to Amazon, AMZN is its stock ticker. And I currently have 3 shares. We have price crossed both our fast moving average and our slow moving average, which triggered 2 sell alerts. But this continuation, we're going to be selling 2 shares and we'll be putting sell orders on those. Current price is at $221. I bought 2 shares roughly right around $237. So we're going to come into our watch list, right click, pulling up a sell order. We're going to sell 1 share. I bought one at $237.79 and one at $237.92. So we're going to take 10% of our hundreds position, which is 2, which is 20 cents. So it's going to be first sell order $237.99. We're adding 20 cents overall, $237.99. We have good till cancel and extended hours. Confirm and send that. And we're going to pull up another one, back to the watch list, right click, sell. We've got 1 share. And the next one we bought at $237.92. So taking 10% of our hundreds place digit, that is 20 cents. So $237.92 becomes $238.12. So 238 and 12. We want good till cancel and working in extended hours. And there's our 2 sell orders for Amazon. If this is the first time watching my videos, my basic policy is don't sell at a loss. If prices dropped below our purchase price, then we'll just set a sell order and we'll wait weeks, months, a year or so before we get that money back and we're able to sell it at a profit. And the reason I'm able to do that, and I choose to do that, is this strategy that I'm trading in. I chose roughly 200 stocks at the beginning of this entire strategy before implementing it to hold long term. So I did quite a bit of research to find out what I thought might be the best long-term stocks over the next 5, 10, 15, even 20 years. Of course, some of those will fall out of favor for whatever reasons. But the majority of companies I own in this strategy are S&P companies, and S&P 500 specifically. So my decision to not sell at a loss and just to hold on to these stocks until they come back up in price isn't a hard decision at all, because I'm not purchasing penny stocks. I'm not working in options. I don't short stocks. I'm mostly just the longs guy. And just with our current stock that I pulled up, LRCX, which is Lam Research, I currently have 20 shares. Price is lower than both of those that I purchased. I was able to sell 20 shares prior to the price falling below my purchase price. And I stand corrected. I did not have 40 shares. So if I were to have 4 books for this particular equity, I would have had 40 shares. And I realized mid-sentence that I did not purchase stocks back here for Lam Research. Lam Research is a stock that we had been holding on to since before the Liberation Day back in February, before the stock market took a downturn. So I stand corrected on that, but for other stocks, that would have applied. In this particular case, we have a sell order for this particular cross and this continuation. Yesterday, we had a cross below the slow moving average, which triggered our alert, and we have continuation down. So this will be the last sell order. I'm going to place another sell order for Lam Research. So we'll look up Lam Research in our watch list, right click. This is going to be the last sell order that I place on video. I will turn the video off to place these orders for the rest of the video. This purchase here is a recent purchase. The purchase that I'm selling on Lam Research, placing the sell order, we bought at $112. So it's significantly lower than our purchase price almost 4 or 5 months ago. That purchase price is at $112.61. So we'll take 10% of the first digit, which is 100. So that's 10 cents that we will add to 112.61 and make 112.71. 112.71. Good till cancel. We're going to confirm and send. And there's somehow I got 10,333 in there. All right, let's pull this up again. Right click, sell. We want 10 shares. And I said 112.71, 112.71. Good till cancel and extended. Confirm and send. And there's our 10 shares. And there's our sell order. Moving next to Meta, META, which is parent company, also known as Facebook. So we have continuation from our price crossing below our slow moving average yesterday. So we will be selling 1 share of Meta. I currently have 3. That's 3 books, 1 share each. So we're going to be selling 1, possibly at $737.50. And it did. $737.50 for one that I bought at $727. So we'll say that's a $10 profit. Now, these 2 shares I bought recently up here just several weeks ago. And I did that because in my research, I found something. There's something after earnings called earnings bias or earnings drift. And what that means is, so for several days, maybe a week or 2 or even more, depending on which direction the price moves after earnings, it continues to go that direction. So I decided to implement that part of my strategy. And so far with the stocks that I purchased, it is not working. If you're new to my videos, this is the first time you're watching, or you've seen a couple and I haven't explained how I operate at earnings, whatever stocks I own during earnings, I sell half. I try to sell half of the shares. And the reason I sell half the shares is to protect my downside. I would rather have half my shares for potential gain than have all of my shares just waiting and allowing the price to fall after earnings, which in this case it didn't, but if it were to fell after earnings, I would have all of my shares weighing down on my portfolio. And then that money most likely in many cases would be locked up and I wouldn't be able to sell at a profit. However, in this particular case, it's quite possible if I had purchased back here at Meta originally and Meta took a tumble, if it took, let's see, how big is this range? 694 to 775. So that's an $80 range. So that would have put us down 620. So yeah, we would have possibly fallen that amount and then I'd have all 4 shares locked up waiting for price to move back up. But I tried adding something to my strategy, and I'm finding out that earnings bias or earnings drift in my particular case isn't working out. So we'll move on to the next stock, and that's 3M. Now, what do we have? So for the past for the past 4 days, we've been getting 3M price alerts. When price moves above our fast moving average, it's triggering a sell alert. But in this particular case, we have price moved back down so far today. So we will not be buying any additional 3M. So we're going to move on to monolithic power systems, which is MPWR. All right, monolithic power, which is MPWR, we absolutely have price continuation from this price crossing below our fast moving average. I will set a sell order off video, and I will do that later. Right now, we're just going to move on to our next stock, which is QQQ, which is the triple Qs, which is it tracks the Dow Jones Industrial Stocks, which is an index of 30 stocks. I currently have 3 shares. We sold one yesterday because we had a cross the day before with price continuation. We opened up with a cross below our fast moving average yesterday, and then today we have continuation of that, so we will sell another QQQ. We're going to sell one. Hopefully it goes at 6. Well, price just moved up on us. Maybe we get a higher price. 562.73. And I sold the share that I bought at 536. So that is roughly a $26 profit on that sale. Now the last stock that actually we have an alert, a sell alert triggered, is XLY. And we had price move down below our fast moving average. And we have price continuation in the downward direction. With that, we will be selling one of our XLY. I bought 3 of them at $229.49. I bought one at $218.40. So we're going to be selling the one that I bought at $218.40. If it goes, it did not go. We'll try it again. $226.21. Cancel 2 orders, and we're going to sell market. Sold that at $226.28. So rounded up, that is an $8 profit. We currently have 3 that we've purchased at $229.49. All right, now that is all the alerts that were triggered. We have nothing on our list to look at that were triggered days earlier. So we will look at, we're going to go to our market watch. We're going to look at our calendar, and we want to see if we have any earnings. And we're going to pull up all account positions. We have earnings this afternoon for Zoom. We have no earnings tomorrow, so we want to go back to our charts. We're going to pull up Zoom. Current price is $72.71, which is significantly lower than the 8 shares that I purchased at roughly $89. All right, so what I'm going to do, I'm going to place a sell order for 2 of the shares because we have earnings this afternoon, and I would like to possibly sell, I said 2 shares, but it's going to be 4 shares and 2 books. So Zoom, I am maxed out at 8 shares, which is 2 shares for each book. It's very unlikely that Zoom is going to have such a blowout performance that they're going to go from $72 all the way up to $88 or $89. That's extremely unlikely, but just in case, we're going to go ahead and place those sell orders at, just in case. And there we go. We have all of our sell orders and sell alerts and any other sell that's possible taken care of. It's now time to move on over to our buy alerts and buy lists, buy orders. So we will be taking a look at DraftKings, DKNG. We have a cross, say yesterday, maybe even possibly late 2 days ago in the afternoon, but we clearly have price moving up after that cross of the fast moving average over and the slow moving average. Now it could be a risky move if I choose to buy, which I probably will end up buying my stocks. Right now I have 4 shares of DraftKings. I like to be maxed out at 16, and I like to make sure I have all 4 books when we have the fast moving average crossing over the slow moving average. And I would really love to be able to sell out of all of my books when it goes the opposite direction, when the fast moving average crosses below the slow moving average. But I simply just do not have a strategy of buying here, holding, and then selling at the cross. I also buy and sell as price moves across both the fast moving average, or in this particular case, if it were to have crossed here and continue down the next day, selling during this price movement as it goes up and down. So it's quite possible when we have price move up here, I might have bought somewhere around in here, possibly. I might have bought DraftKings just for it to turn right back around, and then we possibly would have been holding on to that until we have price here. And I apologize if that's hard to follow. I am becoming a better extemporaneous speaker, and my explanations are improving from when I first started several weeks ago making videos. But the point is I have 3 main indicators or alerts, and that's when price moves across both the fast moving average and the slow moving average. That's 2 separate alerts. And I have another alert when price of the fast moving average moves in either direction across the slow moving average. So price across the averages, and the average crossing each other. Those are what triggers my buy and sell alerts. But before I got sidetracked and off point, what could be a little risky of buying DraftKings right now is tomorrow. Jerome Powell and his report and his speech of in what direction the market may move based on what he says. It is quite possible that he may be a little hawkish and may be leaning towards not even considering any type of interest relief. Therefore, price could move down drastically tomorrow, or at least downward, but it could go the opposite direction. So I try not to guess which direction that the market may move based on any information coming out prior to its release, because statistically for me, whichever I chose, it happened more often than not to go the opposite direction. So I'm going to buy, and I really don't care which direction it goes, because DraftKings is going to be more than likely a very profitable stock over the next several years as online betting becomes easier to access and more common with a larger variety of people of all social classes. There isn't a great deal of competition. There are a few other competitors within the online betting industry, but it's not an easy industry to get into. So they will benefit, and as investors, we will benefit as well. So with all that said, let's go ahead and max out to our 4 books, 4 shares each. So that's 16 shares. So I need to buy 12 more. And there's 12 and $46.01. And we got it at $46.01. All right, next on the list is EW, which is Edwards Life Sciences. Edwards Life Sciences is a company that they are trying to perfect detection and the management of health conditions. They look to innovate and improve and invent technology. Specifically, I think they're the global leader in designing manufacture of artificial hearts and everything having to do with heart transplants. But we'll go ahead and just move on to, we had a cross yesterday. We have price continuation. Same thing that I just spoke about with DraftKings. It's very possible that we may lose whatever we buy. Price might go down, but you can see EW is a choppy stock. So if we bought here, say at this price cross, price went down, we eventually would have gotten our money back, and then we would have bought in somewhere else. Again, price moved down. So as a choppy stock, and again, this is part of the S&P 500. It is a great stable company. It is a medical innovator. They are pretty much the leaders in their field. So over time, which is what I'm interested in, and what hopefully you would be interested in as well, is they eventually will make us money. I'm not truly all that interested in the short term. So right now I have 2 shares, which is 1 book. I like to have 2 shares each in 4 books, so that would be 8 shares. So right now I need to buy 6 shares, and we're going to purchase 8166. And we have our full book, our full 4 books. All right, next on the list is Hilton, HLT. So this, we had price cross several days ago. However, I'm leery to buy Hilton because it is not a consumer staple. It is not a defensive stock. It falls more under discretionary because it's a part of travel. And there's just so much talk with the experts in the financial industry that we are possibly looking at a short-term downturn for various reasons. And that may be true as indicated by, we reached a high of 274, and for the past 2 days, well, including, the 3 days, prices dropped for the past 2 days. Now this one, 3 days ago or 2 days ago, I had said that I'm leery to buy, but we're going to wait another day, and if this candle had been higher, I would have probably bought in, but it's not. It's going down. Looking at the MACD, we have a reducing volume here, going from the bright green to the darker green, and that indicates a reduction in volume. However, it's not a very strong indication. I'm just trying to use a little bit of the knowledge I have of sectors within the financial markets compared to DraftKings, which could be considered not strictly defensive, but typically, statistically, as markets become a little more difficult on people, gambling actually increases. It does not decrease, it increases. But DraftKings and EW, Edwards Life Sciences, they both had strong moves up. So I didn't really have a problem buying them. But Hilton, we're going to pass on Hilton again. And if price goes up tomorrow, we'll see what happens after the news release. So we're going to move on to Kinsale, KNSL. Kinsale Cap Group. Kinsale Group is a high-risk insurance company. They just had their earnings back here on the 24th, and if we look, they had a decent earnings. If we look, they had an estimated of $4.36, but their actual earnings per share was $4.78, and that is actually pretty good, above the estimates. So that's why possibly we have stock going up now. It's also, insurance companies are also a defensive type company. We had price cross yesterday, but we do not have price continuation. So we will wait until tomorrow, see what happens, and if price goes up, we will buy in then. But for now, we're going to move on to Roku. All right, we had price cross 2 days ago. We did not have continuation. Now we have price movement higher today over yesterday, but we're not higher than the opening 2 days ago. So I do not count this as a true continuation for Roku. And also, Roku is not a defensive stock. They are a growth stock. So with these two pieces of information, with price not actually being higher than the open on the day of the cross, and that it's not a growth stock, I'm not going to buy. However, if price was up here, I would buy regardless, because I do believe in price continuation being a very strong indicator. That tends to work out anecdotally for me far more than it does not. So now I'm going to move to an ETF XLB, and XLB is a materials ETF, and materials actually is doing quite decent given the tariff constraints. However, for XLB, I like to be maxed out at 8. I'm currently at 6 shares, so that's 3 books of 2. However, this 1 month chart, this 1 month indicator means that it's quite possible that our fast moving average is lower than our slow moving average, and I tend not to buy any stocks. It's very rare that I'll buy a stock that at this point when our fast moving average is lower than our slow moving average. But since I already have 6, I'm not going to be purchasing any additional. So we're going to move to our UDOW, which is our last buy alert that was actually triggered. So we have an alert. We had price cross the fast moving average yesterday, and we do have a continuation today. Fortunately, there are quite a few stocks in the Dow Jones Industrial Average that are defensive type stocks. Some stocks that are part of the Dow are, well, United Health, that company's had a problem. Sherwin-Williams, Verizon, Procter & Gamble, Coke, McDonald's, Johnson & Johnson. So we have price continuation, and it's also defensive. So I want to make sure we're maxed out. And UDOW, I max out at 8. So that's 2 shares for 4 books. So we're going to buy 2 more. We'll just drop this down to 2, come down here to 97.59. And we bought that. So that is all the stocks that hit our buy alerts. And looking at our past list, I do not have any other stocks from the past several days that I need to act upon, other than taking a look at Monster, MNST. This has, well, apparently it's not Monster. This is the wrong chart. I need to come back to my 3-month and 1-day chart. This is what I was looking at. So what we have here, we have a zone of consolidation. We had earnings, price moved up, but it's really not going anywhere. So we're going to extend this box back out to incorporate these 2 candles. And what I'm waiting for is price to move in one direction or the other. If it goes down, we're selling. Right now, we've got stocks that we're holding on to. We sold half of our stocks, which would have been 6 at a profit, and we're holding on to the other 6 that gave us a nice, decent $5 gain. And hopefully, if it does move down, it'll just be a very slight move. But we are waiting for price to move outside of this box, one direction or the other, to let us know if that's a breakout. And breakouts usually are pretty strong. If price comes down here and breaks out of this zone, it's usually a good indication it's going to go down for a while. And the opposite is true if it goes up. So that is all of our stocks that we needed to look at on our sell and buy alerts and our past list. So we're back to our SPY chart. Well, now we will take a look at our transactions for the day, our buys and our sales, what the results were. All right, so for today, we made $67.32 in our realized gains. And we're right around 0.08% better performance than the S&P 500. With that totaled with the old account that I had to close and cancel, we're looking at just over 5.5% better performance that we are performing over the S&P 500. This is our account at 16.26 as of August 18th, prior to the closing of this account. And the S&P 500 at 10.54. So we are still outperforming the S&P 500. So if you have any questions or thoughts or ideas, please feel free to reach out and I will try to answer them or respond to any comment as quickly and efficiently as possible. So the last thing we want to do, we want to look over our list. So today we sold Apple, Meta, QQQ, XLY. We put a sell order for Amazon, Lam Research, and Zoom. And we bought DraftKings, EW, Edwards Life Sciences, and the ETF UDOW. And if you are choosing to follow me and make some of the trades that I'm making after you've done a little bit of research on those, please reach out. Let me know. I'd love to hear about your progress. You can comment directly on the YouTube comment section, or you can go to the Facebook, the Day Tradester Facebook page, and you can comment through there. With your help, we can build a community of traders. We can build a community of investors. And with either one of those communities, the Facebook or the YouTube, we can learn, show support, and brag. Some of you may find that my strategy of finding and locating trades and the strategy upon sell, you might find that I've got a pretty good system. You might find that I'm trustworthy over time, and some of you might put a larger trade than I put. And over time, I'd love to hear about that. If you made it to the end of the video, thank you very much. Hopefully you're getting something out of it and that you feel like it would be helpful to hit that like, share, and subscribe button.